All right, so we're diving into these Market Wizards interviews you sent over. Talk about a treasure trove, legendary traders, years of insights.
Yeah.
It's like we're getting a backstage pass to Wall Street.
It is. It's a gold mine. Like you said, it's not about trying to copy their trades, though, right?
Exactly.
That's like impossible. It's more about what makes these people tick, what makes them so good.
Exactly. So where do we even begin? I mean, we've got decades worth of interviews here.
Well, one thing that really struck me, no matter the market, no matter who we're talking about, is this focus on independent thinking. They didn't just follow the crowd, you know?
Right.
They did their own thing.
That reminds me of that one interview with the investor who went all in on tech stocks.
Oh, right.
Right before the dot-com bubble burst.
Yeah, classic example. That's what happens with consensus thinking. You just get caught up in the hype.
Absolutely.
And he admitted it. He was chasing returns, wasn't really thinking for himself, ended up costing him big time.
Ouch, yeah.
Yeah.
So independent thinking, got it. But there's more to it than just like being contrary for the sake of it.
Oh, for sure. It's about having a system, like a framework, you know, for understanding the markets and sticking to it.
Yeah.
Even when it's tough.
Sticking to your guns.
Exactly.
And a big part of that, from what I gathered, is risk management.
Huge.
These traders are obsessed with not losing money.
It's like their number one rule.
Yeah.
I remember one trader, he had this, the 0.1% risk rule.
Okay.
He wouldn't risk more than that
0.1%.
on any single trade, no matter how good it looked. That's discipline.
That's incredible. But it makes sense, right?
Oh, yeah.
If you're not wiping yourself out with one bad trade,
Exactly.
you can stay in the game longer.
Yeah.
Let the winners run.
Right. Play the long game. Exactly.
Exactly, yeah. Like that old saying, slow and steady wins the race.
100%. But it wasn't just about being like a robot, right?
Right.
Just sticking to the plan no matter what. They also talked a lot about intuition.
Yeah.
And self-awareness.
Yeah. That was fascinating to me. You
Yeah.
get all this data, all this analysis, but a lot of them, they talked about like listening to their gut,
Right.
understanding their own emotions.
Oh, totally. Like that story about the trader who realized his need to be right was actually hurting him.
Yeah, yeah.
Remember that?
Tell me more about that.
Oh, he was so focused on like proving his analysis correct, you know,
Right.
that he'd hold on to these losing trades way too long.
Oh, I see.
Ignoring all the signs. Like his gut was telling him something's off here.
It's so human, isn't it?
Totally.
Our ego gets in the way
All the time.
of making good decisions.
Right.
Seems like these market wizards, they figured out a way around that.
They did. They mastered the internal game as much as the external game.
So true. So we're seeing some common threads here.
Yeah.
Risk management, intuition, self-awareness.
Yeah.
But what about when it comes to actually like making trades?
Well, that's where it gets really interesting.
Okay, why is that?
Because they all had their own unique approach. There wasn't like a one-size-fits-all, you know.
Yeah, that makes sense. That's what I was thinking too, is like that one trader, he was all about order flow. Remember him?
Oh, yeah.
I'd never even heard of that before.
So order flow, basically it's all about understanding the dynamics of the buy and sell orders right as they hit the market.
Okay.
And this guy, he just had a sixth sense for it.
Huh.
Yeah, used it to his advantage.
So it's not just about like having information.
Yeah.
It's about understanding the nuances,
The context.
the context.
Yeah.
Right, like that other trader who used, what was it called? Abstract factor analysis.
Oh, yeah.
That was over my head, but totally different approach.
Totally.
Again, deep understanding, almost intuitive.
Exactly. It proves there's no one right way to approach the markets, you know?
Okay.
What matters is finding what works for you and really understanding it.
Right. And having the discipline.
Yes, the discipline to stick to it.
Stick to it, yeah.
Even when things get rough.
Which, speaking of, a lot of these interviews,
Yeah.
they challenge some pretty common beliefs about the market.
Oh, yeah, for sure. Like, how many times did the efficient market hypothesis come up?
Right. What was that again?
That's the idea that all information is already reflected in the market price.
Okay.
So good luck trying to beat it, right?
Yeah, right.
But these traders, they found ways.
You did.
They showed that while markets might be generally efficient,
Yeah.
there are always these inefficiencies. You just got to know where to look.
So they're like proving the exception to the rule.
Exactly. They challenged the status quo. They found their edge.
Huh. So we've got independent thinking, risk management, the importance of intuition.
Big one.
And we debunk some common misconceptions.
Oh, we're on a roll.
I know. Feeling like a market wizard yet?
We're getting there.
I know, right?
We're getting there. This is just the tip of the iceberg, though.
Oh.
There's so much more to uncover here.
All right, so where do we go from here? I mean, it's one thing to talk about it.
Right.
But how do we actually put this into practice? Like, what are the actionable steps? I'm ready to get practical.
Let's do it.
Right.
We've laid the groundwork.
Yeah.
Now it's time to build.
Love it.
Let's build.
Okay, so we've laid the groundwork.
Yeah.
We know these market wizards, they weren't just like winging it. They had a method. But how do we take all that and actually apply it, in our own lives, with our own investments?
Well, think back to what we were saying about having your own view. It all starts with research, right?
Okay, so instead of just like blindly following the latest hot stock tip.
Exactly.
We got to do our homework.
100%. Look at a company's financials, understand the industry, and then come to your own conclusions.
Right.
Don't just trust someone else's opinion, even if they sound really convincing.
Yeah, even if they're like a talking head on TV.
Exactly. It's like, be your own detective.
Oh, I like that.
You got to piece together the clues before you make a move. Speaking of clues.
Yeah.
Remember all that stuff about risk management?
Oh, yeah.
The 0.1% rule, for example?
Right. Never risk more than a tiny fraction of your portfolio on a single trade.
It's easy to say, right?
Yeah, it is easy to say.
Harder to do.
A lot harder to do, yeah, when you're like in the heat of the moment.
You get caught up in the excitement, FOMO kicks in.
Oh, yeah. Fear of missing out.
Exactly. And that's when discipline comes in.
Discipline.
Yeah.
So how do we get more of that?
Well, for one, you can use stop-loss orders.
Stop-loss orders. Remind me what those are again.
They're like a safety net, basically.
Okay.
You set a price, and if the stock hits that price, it automatically sells.
So you're limiting your downside.
Exactly. You're limiting your losses before they get out of control.
Oh, okay. So it's kind of like putting the bumpers up on the bowling lane.
Exactly.
Keeps you out of the gutter.
Keeps you out of the gutter. I like that.
But it's not all about the technical stuff, is it?
No, not at all.
We talked about intuition.
Yep.
That little voice in your head that's like, are you sure about this?
All the time. But it's easy to ignore it, isn't it?
Oh, totally. Especially when, like, everyone else seems so certain.
Right. And that's where self-awareness comes in, big time.
Okay, so how do these market wizards, how do they handle that? They're human, right?
They are. But a lot of them talked about keeping trading journals.
What's that?
Basically, they'd track their decisions.
Yeah.
Like, why did I buy this stock? Why did I sell it?
I see.
And then later on, they'd go back and look for patterns.
Interesting.
Were they being driven by logic or by emotions?
So it's like holding up a mirror to your own trading.
Exactly.
And seeing if, like, your emotions are clouding your judgment.
And if they were feeling what they called
Tilted.
Like overly emotional, not thinking straight. Yeah.
They would just walk away from the market for a while.
Step away, take a break.
Exactly.
Yeah.
Sometimes you just need a breather, right?
Totally. Clear your head.
Get some fresh perspective.
Yeah.
So we've got the research, the risk management, the self-awareness.
That's a lot.
It is a lot. It's like juggling, right?
Yeah, it is. So how do we even know if we're on the right track? Like, what are we aiming for here?
Well, these market wizards, they all talked about the importance of having a system.
A
framework for making decisions. And a key part of that is
finding your edge.
There it is.
Right. Like that order flow guy.
Yes.
Or the abstract factor analysis trader.
Totally different approaches, but they both found what worked for them.
So it's like figuring out your superpower.
Yes.
Your investing superpower. And then you just get really good at it. Exactly. You become the master of your domain.
Master of your domain. I like it. But what about those times when inevitably things go wrong? Because the market doesn't always go upright.
Never goes up in a straight line.
No.
And that's where the concept of cycles comes in.
Cycles, okay.
These market wizards, they understood that markets move in cycles.
Okay.
Periods of growth followed by periods of contraction.
Like the ebb and flow.
Exactly. The ebb and flow, like the seasons, right?
Yeah. You don't plant crops in the winter.
You got it. So you don't want to be overly aggressive when the market is contracting.
So it's not about timing the market perfectly.
No.
But more about like understanding these larger patterns.
Understanding the cycles.
Yeah.
And then adapting your approach accordingly.
Okay, so it's like they're playing chess. Yep. They're thinking several moves ahead.
Always anticipating the next move.
Exactly. But what happens when you make a bad move? What do you do when?
Good question.
When you face a setback, when you experience a loss.
Everyone does, right?
Yeah.
Even the best of them.
So we were talking about setbacks, right? even the market wizards, they made mistakes. What did they do to bounce back?
Well, they all talked about learning from their mistakes, like really dissecting what went wrong.
Okay.
See if there were any warning signs they missed, any biases that snuck in.
So it's like reviewing the game tape, right? After a loss?
Exactly. Figure out what went wrong so you can improve next time.
Makes sense. So you got to be willing to adapt.
Oh, absolutely. Because the markets are always changing. What worked yesterday might not work tomorrow.
Right, right. So it's not about being stubborn. It's about being flexible. But how do you know, like, when to tweak your strategy versus just riding out a rough patch?
That's where that self-awareness comes in.
Yeah.
These traders, they were brutally honest with themselves about their performance, you know? If they were messing up consistently, they weren't afraid to hit pause, reevaluate, you know?
So humility is important.
Oh, huge. You got to be able to admit when you're wrong.
Yeah, that's tough, though.
It is tough, especially when you've had some success.
Right, exactly.
But that's what separates the good from the great.
The willingness to learn.
The humility to adapt. They never stopped evolving, always questioning.
Like they're lifelong students?
100%. The market is always teaching you something, if you're paying attention.
So it's not just about, like, book smarts.
Yeah. No.
It's also about, like, mental toughness.
Huge. You got to have a strong mental game. These guys, they didn't let their emotions get the best of them.
Yeah.
They didn't let fear or greed cloud their judgment.
That's so hard, though.
Oh, I know. Believe me.
Especially when you see your portfolio, like, down big.
Right. But they had their ways of dealing with it. Some of them meditated.
Okay.
Some exercised. Some just disconnected for a bit.
Took a break.
Exactly. You got to find what works for you, right? What helps you stay grounded.
Yeah. So it's like they're approaching trading as like an endurance sport or something.
I like that. Because it is. It's not a sprint. It's a marathon, right?
Yeah.
You're going to have your ups and downs. The key is stay disciplined. Keep your eye on the prize.
And never stop learning.
Exactly. The markets are always changing.
So what have we learned today?
Well, we've learned that success in the markets, it's not about some magic formula, right?
No magic formula.
No, it's about understanding yourself, understanding the markets, and having the discipline to stick to your plan, even when things get tough.
Beautifully said. So to our listener out there, remember.
Yeah.
Embrace independent thinking.
Love it.
Master risk management.
Dude.
Cultivate that self-awareness.
So important.
And never stop learning. You might just uncover your own inner market wizard along the way.
And remember, even these legends we've been talking about, they didn't start at the top.
Right.
They made mistakes. They learned. They adapted. They carved their own path.
And now, it's your turn.
Exactly.
That's a wrap on this deep dive.